Welcome to Forex Trend Atlas. Each weekend, we focus on the big picture, from the quarterly down to the daily charts, using well-known technical tools. Now, let's begin with this week's outlook. Here is the 3-month chart of EURUSD, also called the quarterly chart. As shown here, I see this as a breakout above the long-term downtrend. The key high is around 1.2320. Unless price breaks above this level, we cannot confirm a clear shift into a long-term uptrend. For now, I consider the quarterly chart to be in a broad trendless state between current levels and 1.2320. Next, let's move to the monthly chart. Here too, the downtrend seen on the quarterly chart has been broken to the upside. On this time frame, the notable high is the green zone around 1.22 to 1.25. And the notable low is the blue zone around 1.09 to 1.12. I consider the market to be range-bound, or trendless, within this zone. If price clearly breaks out of either side, I will expect the start of a new trend. Here is the weekly chart of EURUSD. Here, price can be seen within an ascending channel on this time frame. The pair touched the upper boundary of this channel twice, once in July and again in September 2025, and has since been consolidating. If price breaks above the September high near 1.192, it could push through the top of the channel and head toward the 1.22 to 1.25 zone, the area we've marked as a key target on the monthly chart. To the downside, a major level to watch on the weekly chart is around 1.12, as shown by this horizontal line. This price also aligns with the 38.2% Fibonacci retracement of the move from the start of the year up to the July high. A pullback to this area would be considered a normal correction within the trend. However, if price closes below 1.12, it could open the way for a deeper move toward 1.05, which coincides with the lower boundary of the ascending channel. Now, let's move to the daily chart. The uptrend that began at the start of 2025 is still technically intact, but price has broken below the upward trend line since the end of September. Because of this, I've paused my bullish bias for now, and am taking a more neutral stance. Let's focus on the recent price action. To the upside, I think it's better to stay cautious until price breaks clearly above the recent high around 1.192. To the downside, the 1.159 area continues to act as both support and resistance. In early October, price consolidated around this zone and rebounded once, but it has since fallen back toward this same level again. Currently, price is fluctuating near 1.159, showing indecision in the market. If price breaks below the October low at 1.154, selling pressure could increase, while a break above the October 17 high at 1.173 would suggest renewed buying strength. Overall, the daily chart remains directionless for now, and many market participants seem uncertain about the next move. The uptrend seen on the weekly and daily charts appears to be in its late phase. It's a time to stay cautious rather than to buy aggressively. Let's keep the key price zones in mind And as always, approach the market calmly, with a long-term perspective throughout the week. Thank you for watching today's analysis. If you found it helpful, please subscribe and hit the bell for updates. Let's continue to approach the markets with patience and discipline. See you in the next Outlook.